Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 28th. My name is Eric Wilkinson. Yeah, you may recognize me as the Wolfman from mainstream media, but what I'm here to teach you right now is how to trade options. But one thing is, remember, this is how to implement that into your portfolio, but please do that in your own way. And remember, past performance of any trading system or methodology isn't really necessarily indicative of future results. All right. Having got out of the way, let's get it on with some economic data. Not a whole lot today other than crude oil inventories coming in with a drawdown of 10 million barrels, expected to be a drawdown of almost 3 million barrels. That's a good thing because it shows there is demand for crude oil. Now remember, crude oil not only makes gasoline products, there's also distillates in there, and the distillates goes into the manufacturing process for things like plastics and other aspects of that oil-based product. So what we're seeing there is some demand there. A lot of that may be due in part to the consumer in the gasoline, but it's also in the manufacturing process, which is key right now because we are hearing all of these things come out of mainstream media and elsewhere that the economy is not doing well. Well, that's not really being reflected in the data. So funny thing is not too long ago, just last weekend, I got in an argument or a debate, let's say, over how the U.S. economy was doing. And this person was actually living in London, and a lot of their news sources, even The Economist, is saying that the United States isn't doing very well. Well, the problem is they're spinning this rhetoric on mainstream media and print because, if they show turmoil or if they show fear, then that actually draws viewership. And that's not really what we're seeing here. If we just talked about, hey, the economy is just humdum and just cruising along, then that doesn't sell ads. That doesn't bring viewers in to their market. They have to have this turmoil. So keep that in mind when you are out there looking at different news sources for your economic data. All right, we got to look at the data and we have to see how that is really going to affect the economy going forward. All right, with that being said, though, we've got that drawdown in crude oil. That obviously is going to give us a little bit of lift here in the futures, which we're seeing. Again, we've gotten above that purple line this morning, now toggling right in and around that, but I don't expect a massive breakout here. I don't think that the demand is enough to drive the prices higher into the 60s. Nothing really even to see out of the OPEC meetings on that front either. So crude oil kind of at that sweet spot as the broader markets are. So despite the fact that we've had these massive fluctuations in these markets, even with the flight to safety and back again, we haven't gone anywhere. And I've talked about that time and time again, that's what I've expected us to see. And that is kind of what's coming to fruition. So without further ado, let's move on to some other markets. And we've got gold futures coming off a little bit after yesterday's rally. Now, remember, yesterday or a couple of days ago, I was looking at gold futures kind of topping out here. We haven't gotten confirmation. We still haven't gotten confirmation. It looks like people are going to start accepting gold at these levels. Then we move over to the bonds. They're kind of middle of the road, really an inside day there, and down at or up about a half of a point on the day into that 160 handle, which I thought was going to be a little bit tougher, or 166 handle, sorry. I thought it was going to be a tougher row to hoe to stay up in that area, but we are kind of holding on to that because they keep talking with the Fed, and the Fed is basically signaling that we are going to continue to lower rates and do a global fight against the recession. All right, so then we've got the VIX. It was actually moving higher today. It was up into the mid to upper 20s, almost testing 22 at one point. But now that we're starting to see the markets turn a little bit and move higher, especially with the demand for crude oil, people are going to see that is probably a driving force, that the manufacturer is more confident and going to be buying some of those inputs into the manufacturing process. We even saw that with the consumer confidence number yesterday, that they are confident. That will give confidence to these purchasing managers, okay? And they're the ones that are the driving force on the economy. They're going to be seeing how demand is, what the consumer is thinking, and ramping up or pulling back on production based on that theory. But here we have the Dow Jones up 200 points on the day. But where are we? Right back to that point of control we've talked so much about. That is where the sweet spot is. That is where the most time in volumes traded and the least amount of anxiety. Now remember, when we start getting overextended to one side or the other, if you are making money, you are still feeling some anxiety as to whether or not you should be taking profits. Vice versa, if you were short, you're feeling that anxiety because you're losing money. When we are right here, the longs and the shorts are very comfortable and don't have a whole lot of incentive to do anything. So we start really kind of getting a little bit more complacent in and around these areas. We haven't really seen the volatility come out so much based on that, but we would expect that that would happen. The reason why we're seeing that volatility is because mainstream media is talking about all of these massive down days on some tweet or massive up days because now we're back at the table with China. I think that it really is a part of that. That is a part of it, don't get me wrong, but we haven't gone anywhere, and that's something they're missing on mainstream media. And then we have the E-mini S&Ps up about 20 points, but right back to the point of control again. And we can go over to the daily charts. You can see overnight inventory did get very short, but coming into today, we flushed those guys out. A lot of that has to do with the good economic data points and the fact that China is looking to come back to the bargaining table over these tariffs, because they don't want to see these high tariffs going into their holiday season either. So if we start doing a tit for a tat heading into the holiday season, that's going to hurt them down the road, because this is where they are getting their bread and butter in a sense. So we've got the E-mini S&Ps flushing out those shorts from the overnight inventory, but we are starting to continue to move higher. We haven't started retracing any of that, which leads me to believe there is a lot of bullish undertones happening here in the overall market. Having said that, I don't think that that means we're doing a breakout on either direction. So with that being said, I decided to go into Qualcomm, which is something I was actually looking at doing yesterday and may have had a slight advantage yesterday, but today is really where I think we're going to get our bread and butter. We can see that we're starting to build out value in and around this area. Price is starting to be accepted here, which is a good thing. I think we can see the market settle down there as well. And then what is the best strategy for that type of situation? Well, it is going to come in the form of a strangle in my eyes, because I'm going to try and pin it on both sides and hope to see that it stays in this range right around that $75 mark. And so I went into the September and sold the 80 calls and the 68 puts. So that creates that strangle right in line with my rules, maybe slightly outside of that 16 delta, which is what I normally talk about, because I wanted to get a little bit more swath, especially on this upside to the 80, as you can see, trying to get above this first sell-off here that we got. But the 67s is well down here below. We found support, so I think that we're going to be good. All in all, I was able to do that strategy for $1.18. So it gives me wiggle room to the upside. So I'm cleared all the way to, or $1.18, I think I said, to 81.18, and then to the downside, doing those 66 puts. Actually, sorry, I moved that down a little bit later. I did look at the 67s, but went down to the 66 put on the downside. So that gives me wiggle room all the way down to $64 and about 80 cents. All right, so I've got a lot of room up and down because I've gotten involved in this with high implied volatility. I expect the volatility to come out as we settle down in and around this $74 for Qualcomm. All right, and that's all I've added. I haven't taken anything off. The 3M trade is looking very good today. I suppose I can talk about that or show a chart of that since I'm talking about it. But let's just look at 3M. You can see we're starting to get that bounce off of those lows. I sold puts in there yesterday at the 145 handle in September. We're getting that bounce. I'd like to see it get back into that value area. If we get back into this value area, we are going to start seeing volatility come out. And we've seen this shift now down that we were talking about with the point of control. All right, so all of those things working in our favor. That point of control is going to be even a stronger magnet for the market to drive higher. One of the only hurdles we have to do is get over this value area of about $1.58. It's only $1 higher than where we are right now, and then the market will easily start migrating back to first this 66 or 166, and then possibly back to the 175. So that's what I'm looking for. We're in a short duration here, so we're getting that theta component that we talk about. That thief in the night that comes and steals your premium is going to start ramping up his collection of that premium, and that's exactly what we want when we are selling premium. All right, so those things are working out quite nicely. That's about it. Tomorrow's webinar is going to be a really good one. We are starting to go into the defined risk of the limiting our risk actually with these strategies that we've been talking about for a big move. So we're going to be able to build that out for this type of environment, because a lot of these things will work out with the strategy that we're going to be talking about. So check it out at protraderstrategies.com. Also follow us on Facebook so you can get quick access to these daily market commentaries. All right, so if you can't take that, take it easy.